Sometimes a company that we so eagerly want to take a stake in turns out to be a little above our budget. You might be eyeing Tesla or Amazon, but those share prices can be intimidating. So what's the solution? Enter fractional shares, a game changer in the investment world that allows you to own a piece of your dream company without emptying your bank account. So what are fractional shares? Fractional shares are exactly what they sound like. Fractions or slices of a single share of a stock, ETF, or mutual fund. This means you can invest in high-value companies without having to buy a whole share. So if you've got $100 and a share of a company you're interested in costs $1,000, you can still invest by buying 1/10 of a share. One of the most appealing aspects of fractional shares, as you might have guessed, is their affordability. They essentially break down the financial barriers that might have kept you from investing in high-value companies. You can start with as little as $1 in some cases, which is a game changer for new investors. This affordability also opens the door to a larger pool of investment opportunities. Because there's no company out of reach with fractional shares, you're not limited by the amount of cash you have on hand. Instead, you can focus on investing in companies you genuinely believe will thrive in the long run. So it's all about your confidence in a company, not just the dollars in your pocket. And because you no longer have to work with wonky numbers, you can comfortably stick to your investing plan and tailor your portfolio towards your strategy. Dollar cost averaging, so your portfolio can easily align with your financial goals. However, fractional shares are not without their limitations. For starters, the selection of stocks available for fractional investing can be limited. Some brokerages only offer fractional shares of companies listed on major indices like the S&P 500. Additionally, liquidity can also be a concern, meaning that fractional shares may not be as easily bought or sold as whole shares, which could be a drawback for some investors. Lastly, there's the issue of transferability. Some brokerages won't allow you to transfer fractional shares to other platforms, requiring you to sell them and transfer the cash value instead, which could have tax implications. If you're considering diving into the world of fractional shares, it's crucial to do your homework. Always read the fine print to understand the brokerage's policies on fractional shares. Be vigilant about any hidden fees that could eat into your returns, as fractional share investments are usually made in smaller dollar amounts. And of course, stay informed. Keep an eye on your investments and the market conditions that affect them. Being well informed will help you make timely and educated decisions about your investment portfolio.